Hi, I'm Tom Elliot and welcome to another financial markets update for Hodges Real Estate. Well, firstly, the Australian economy. There's good and perhaps not so good news to report. Now, the new Treasurer, Joe Hockey, of course, has come in, and one of his first decisions, now that he's in power, was to lift the country's debt ceiling to $500 billion. That's $500 billion. It's a very large number, whichever way you look at it. Now, the important thing to note is that current government debt is around about $350 billion. The question has to be asked, why does Mr Hockey want to borrow up to $500 billion? Well, his argument is that Labor's, as he puts it, reckless spending and inadequate tax policies mean that the course of increasing debt cannot be reversed anytime soon. I think what it means is that we are headed for budget deficits for the best part of the next decade. Quite possibly the Treasurer doesn't want to make the hard decisions early on that could cause him, votes in any future elections. But in any case, Australia's debt is not going down anytime soon. The good news is that, as we all know, interest rates remain very, very cheap, but a warning about the Australian economy in general: if interest rates were to go up, as they did in 1994 when I bought my first house, things would not be so rosy for our economy. Good news, I guess, the carbon tax and the mineral resources rent tax are both soon to be abolished by the federal parliament. The lower house will almost certainly pass both of these measures. However, it is in the upper house where things could get a bit difficult. Now, 1st of July next year, Clive Palmer will probably hold the balance of power in the parliament. He will almost certainly support the abolition of these taxes. Until then, though, businesses will have to keep paying them. The Greens, of course, and most of the Labor Party don't want to see these taxes got rid of, although I do note that Bill Shorten, the leader of the Labor Party, is tying himself in knots a bit at the moment. If he gets rid of a carbon tax, he says, could we have an emissions trading scheme instead? Well, I've been lucky enough to ask the Prime Minister this very question, and Tony Abbott absolutely made no bones about it. In his mind, an emissions trading scheme is just a carbon tax with a different name. So Mr Abbott hopefully wants to and will be able to fulfil that particular election promise. As far as we can tell, consumer confidence is gradually improving. The share prices of the major retailers, David Jones, Myer, JB Hi-Fi, even Harvey Norman, have been a fair bit better of recent times. Of course, we won't know until January, February whether or not confidence actually translates into higher sales in the Christmas, celebratory season. Bad news, of course, the Holden Motor Company, or better known as General Motors Holden, very, very likely, I'm afraid, to stop making cars as of 2016. Now, Holden had a deal with the previous government to keep producing cars in South Australia and engines here in Victoria until 2016. The future after that is very, very murky indeed. The federal government is rather split on how much money to keep paying Holden to keep its manufacturing operations going. If Holden pulls out, Toyota will almost certainly pull out as well, and that will be the end of Australia's car manufacturing industry. Watch this space. Overseas, things continue to muddle on. The American economy just gradually improving. In the last few days, the US Federal Reserve, that's America's Reserve Bank, has said that they're going to have a look at tapering quantitative easing. That's a fancy way of saying they're eventually going to stop printing money. As a result of that, the US dollar has started to rally again. It's gone up and the Australian dollar has gone down. Recently, the Australian dollar bought over 95 US cents. Right now, it's around about 92.6, 92.7 US cents. If the American Federal Reserve truly stops printing 85 billion new US dollars every month, you can expect to see the Australian dollar falling a fair bit further from where it is right now. So if you're an internet shopper and you like to buy things from overseas, I'd do it sooner rather than later. The European economy is still a basket case. I feel like a broken record saying this every month, but it's true. There's a few signs of improvement in Britain. However, a lot of Britain's health and wealth comes out of London. And London isn't really a reflection of the British economy. It's just a lot of very rich Russians and people from the Middle East buying houses and things only in London. It doesn't translate into an improved economy for the rest of the country. As for the rest of Europe, Germany's doing okay, France middling, southern European economy is absolutely dreadful. Closer to home in Asia, Japan is still showing some signs of recovery, some signs of inflation, which is what they need. The Chinese economy is still slowing, but slowing is what they want to do. They don't want to see inflation breaking out. Here in Victoria, it's again very difficult. I mentioned the Holden Motor Company before. Again, if they stop manufacturing, it will hurt Victorian businesses. And indeed, just a week or so ago, Qantas axed 300 maintenance jobs at Avalon Airport, which is not good either for Qantas, those particular workers or the future of the airport in general. Of course, Avalon is located roughly halfway between Melbourne and Geelong. The east-west protesters, the people who don't want to build the tunnel that will link up the Eastern Freeway and the Tullamarine Freeway, have been very noisy as of late. Having said this, I don't think that protest will succeed. I think the government will push ahead with it, but it is something on which the government here in Victoria is staking its credibility. Given that the Victorian economy is very likely to slow down in the next few years, this sort of government-sponsored infrastructure is exactly what we need. It doesn't matter whether it's a road tunnel or a new railway or both. As long as the government is spending money on infrastructure, that's a good thing, and I hope the Napthine government isn't dissuaded by the rather noisy protesters. The Victorian budget remains in good shape. Victoria is one of the few states in Australia that have a AAA credit rating, and in fact most recently it announced a budget surplus, which is very good when you compare that to, say, Queensland, where they've got some real spending and taxation issues. All right, so the question as always is, what does this mean for property buyers, property investors? Well, the local real estate market has been on a bit of a tear recently. Melbourne house prices up between 10 and 12%, again depending on which area you look at, since the start of the year. In Sydney it's more like 15 to 18%. Low interest rates have certainly helped this. I believe the 3 and 4 year fixed rates have pretty much bottomed out. In fact, I noticed in the past few weeks that the big 4 banks have actually just ever so quietly started to increase their 3 and 4 year fixed rates by between 15 and 25 basis points. I think the era of falling fixed rates is well and truly at an end. Doesn't mean they're going to get more expensive, but if you're holding off thinking they'll get a whole lot cheaper again, I'm not so certain that's going to happen. The usual tales of woe about first home buyers are coming out at the moment. They can't afford the house they want. Why didn't they buy a year or so ago? Well, that is actually curiously and rather perversely a sign of a very healthy property market. The clearance rate in Melbourne remains averaging around 75%, which is very good. Anything above 80 is a boom. Anything below 70 means it's a buyer's market. 75 is where we want to be. So the outlook overall I still think is excellent. We've got a few weeks to go before the selling season. In fact, pretty much everything shuts down for the summer holiday break. Plenty of time to both buy and sell a house between now and then, and there's nothing particularly bad on the horizon to suggest that 2014 will be worse than 2013. In fact, I think there's every likelihood from a real estate perspective it could be a great deal better. All right, thank you very much for your company again today. I'm Tom Elliott for another financial markets update for Hodges Real Estate.